I'm here with Jelle Keijmel, tax specialist from PwC. If a company doesn't have a presence in a country, one might assume that they don't have to pay tax, but countries have withholding tax. Can you tell us a little bit more about that?
A company pays taxes when they have a presence in that country, and that's being called income tax, corporate tax. But if they don't have a presence, companies often think, okay, now I don't have to pay taxes. And presence, etc., is a whole different topic. But if you don't have a presence, it doesn't mean that you don't have to pay taxes. It could be that you have to register for withholding taxes, and withholding taxes could be due on transactions. So what you see with withholding taxes, it's a typical tax which is levied on a transaction from one country to another country. So, for example, dividends, interest, management service fees, it could be all those kind of fees. The withholding tax does not require that presence, so it could only be the transaction that you're looking at.
When a multinational goes into Africa, the exact contractual terms can have an impact on the tax they pay. Can you tell us a bit more on that?
Contractual terms are essentially the first handle to qualify what kind of taxation you're going to qualify for and which you have to pay in those countries. So what you see is that contractual terms are going to be important in order to determine whether you have a presence, for example, whether you have to register as an entrepreneur for VAT, but also for withholding taxes, whether there's going to be streams of cash flowing from one country to another country. And the qualification of those services can be determined by the contractual terminology. So if the contracts point into a certain direction, it could mean that based on that you have to qualify the payments in terms of a withholding tax for that country.
Okay, Jelle, tell us about the implementation of withholding tax in South Africa.
South Africa already has withholding taxes, so they're not unique in that, by the way. A lot of African countries have withholding taxes, but South Africa has withholding tax currently on royalties and dividends. As from 2015, they plan to introduce withholding tax on interest, and from 2016, they are planning to introduce withholding taxes on management services. What you see is that they try to bring that in line with each other, so everything is being increased to 15% in terms of withholding tax. And as from that moment, you will be paying as a multinational company on dividends flowing out 15%, royalties flowing out 15%, interest the same, and management service fees in principle the same as well.
Can you tell us about how management services fall inside or outside the South African tax net?
Management services are sort of a strange one. Dividends, royalties and interest are quite straightforward. Management services are only taxable as from 2016 if the source is in South Africa. That's sort of weird terminology maybe, but what it essentially means is that if the management services are being rendered in South Africa, then it should be taxable. And that's actually strange because management services, the word implies it already, that it's services from management from, for example, a parent company. And typically those services are being rendered outside of South Africa. So what that means is that the management services are probably going to attract few taxes. And it's more of a registration thing for the South African revenue authorities than that they expect to have a lot of taxation because management services are typically rendered outside of South Africa and that will fall outside of the scope of management services.
There has been an increase in the number of withholding taxes in Africa. Can you give us an example?
There indeed has been an increase in number of withholding taxes. That's also the message that we convey in the article, in the press release. What you see there, it's not only an increase in the number of withholding taxes, but there's also an increase in the rate of withholding taxes sometimes. But overall, Africa is seen as a continent with a lot of withholding taxes, and they can vary from 5 to 30%. What might be interesting is to illustrate the impact of withholding taxes by ways of an example. Let's say that we have a Ghanaian company which is held by a South African parent company, and that Ghanaian company has to pay for services rendered by the South African company. Let's say that it's subject to 20% withholding tax in Ghana, which could be the case. Then of a payment of 100, the South African company will only receive 80. And we forget about foreign tax credits now because that only makes the example overly complicated, I think. So the South African company receives 80, and when that's being received in South Africa, that will be taxed with corporate income tax, 28%. Subsequently, if the South African company is, for example, held by an international other company, and it will distribute its dividends on that, it will be taxed again with 15%. Ultimately, the foreign parent company, will only receive about 49 of that 100. Essentially, that means a 51% effective tax rate on that payment. So it is quite an impact that the withholding tax can have on that transaction. In international tax law, we have double tax treaties between countries, which effectively are aiming for eliminating the double taxation. If you have a country with whom you have a tax treaty, it might be that 20% is being reduced to, let's say, 5%. So that will take out already 15% of your tax burden, and that's quite effective. So what companies should do is look at where they set up their holding company, how they're going to invest into those African companies. But I think one topic is really important to consider in that. It's not only taxes that will lead the way, but I think it's business that should lead the way first. Taxes will follow, and it's important to consider those, but business is much more important, I think, because taxes shouldn't be leading business in that case.